Let's be honest. The investment rules that worked for the last 40 years, they're broken. We are in a completely new era, a new world disorder, and if you want to navigate it, you're going to need a new playbook. So today, we're going to break down a really powerful framework that splits your strategy into two key parts: defense and offense.
So, let me just ask you a question. Is your portfolio really ready for this? Because the volatility and the uncertainty that we're all feeling, this isn't just a blip on the radar. The old strategies are failing people. So what has fundamentally changed?
You see, we've stepped into what a lot of analysts are now calling the era of geopolitical dominance. What that really means is that political decisions, from governments and central banks, are now having a bigger impact on your investments than the classic stuff, like how much a company is earning. It's a completely new game.
Okay, so if we're going to navigate this new world, we first have to get our heads around the powerful undercurrents causing all this instability. Turns out there are four huge forces, four big tensions, really, that are totally reshaping our world as we speak. And the thing is, these four forces, they're all tangled up together. First up, we've got this insane mountain of global debt that just can't be sustained. Then, you've got this strategic move away from globalization, which is breaking all those supply chains we used to depend on. Third, there are deep internal crises, both political and social, happening especially within the United States. And finally, you have China's massive economic pivot, shifting from being the world's factory to its primary tech innovator.
Let's zoom in on the US for a second. A perfect symptom of this internal stress, just look at the stock market. You've got the Buffett indicator, which compares the stock market's value to the country's GDP. It recently peaked at an unbelievable 270%. That is a huge red flag. It shows this massive disconnect between Wall Street's fortunes and what's happening on Main Street. And that's just pouring fuel on the fire of all those internal divides.
Okay, now let's flip the coin and look at what's happening in China. Over there, the government has made a very deliberate pivot. They're steering capital away from things like the property bubble and pumping it straight into key strategic sectors. And the result? Well, China is now leading the pack in 37 out of 41 critical tech areas. We're talking a complete shift from just mass production to high-value, quality innovation.
And this is where it gets really interesting. It leads to this kind of paradox. As the US turns more inward, more protectionist, China's doing the exact opposite. It's opening up, filling that global economic and diplomatic vacuum that's being left behind. It's almost like China is adopting the playbook America used for decades.
Okay, so the big question is, how on earth do you invest in a world that's being pulled in so many different directions? Well, the answer lies in a balanced strategy, one that's built on two core pillars: a rock-solid defense and a really, really smart offense.
And this slide right here, it really captures the whole philosophy. Defense, that's all about survival. It's about making sure you can get through those brutal, long bear markets with your capital and, more importantly, your purchasing power intact. Then you have offense. This isn't about buying everything, it's about being surgical, about identifying and capturing those few pockets of real growth. They're not separate ideas, they are literally two sides of the same coin.
Okay, first things first, defense wins championships. So let's dive into that. Let's talk about how to build the defensive side of your portfolio, the part that's designed to be your anchor in a storm.
All right, your defense is going to stand on three super strong pillars. First, liquidity. And yes, cash is absolutely king right now. Second, physical gold, the classic safe haven asset. And third, a more modern player, self-custodied Bitcoin. And that self-custodied part is key. It means you hold the keys, not some exchange. It's increasingly seen as digital gold, a true store of value.
So when we talk about gold and Bitcoin in this context, the key concept we're getting at is store of value. What does that mean? It means it's an asset that you and only you control directly. There's no counterparty risk. You're not waiting on a bank to keep their promise. It's basically the ultimate insurance policy against your currency losing value or the financial system hitting a major bump. And hey, let's talk about cash for a second, because holding cash isn't just about playing it safe. It gives you what's called strategic optionality. That's a fancy way of saying it gives you the power to act when everyone else is forced to just react in a panic. It lets you go shopping for amazing assets when they're on a fire sale.
Okay, so once our defense is locked in and solid, then we can start thinking about playing a really smart, targeted offense. And let me be clear, this is not about buying an S&P 500 index fund and calling it a day. This is about being a sniper.
So what are the rules of engagement for this smart offense? First, ditch the passive index funds. They're just way too concentrated in a handful of giant overpriced tech stocks. You got to be an active stock picker now. Next, you have to look beyond our own borders. Geographically, all signs are pointing toward Asia for real growth. Third, you want to prioritize what we call value stocks over those super expensive growth stocks. And last, but definitely not least, you need to hunt for something called strategic asymmetries.
Okay, so I mentioned prioritizing value stocks. Let's break that down with this idea of duration. Think of it this way. Those high-flying, long-duration growth stocks, their value is all based on earnings that everyone hopes they'll make way out in the future. That makes them incredibly fragile when things get uncertain. On the other hand, short-duration value stocks, their value is based on the hard cash they are generating today, and that makes them so much more resilient when the future looks, well, pretty cloudy.
All right, you want a mind-blowing example of a strategic asymmetry? Look no further. On one hand, you have the market cap of a company like NVIDIA. It's absolutely massive, right? It's powering this whole AI revolution. Now, compare that giant bar to the market cap of the entire copper mining sector, and then look at the uranium sector. It's just a tiny sliver. Here's the asymmetry. Those AI data centers need a mind-boggling amount of electricity and raw materials like copper. The companies that actually dig this stuff out of the ground are valued at a tiny fraction of the tech giants they supply. That is a massive potential imbalance and a huge opportunity.
So we've walked through the new reality we're in, the big forces causing it, and this two-part strategy for how to handle it. But here's the most important part. We have to move from just understanding the framework to actually having a vision. How do these ideas really apply to your portfolio?
And that really brings us to the final question you need to ask yourself. As we navigate the rest of this decade, this era of transition, is your portfolio going to be a relic, a museum piece from a bygone era, built on rules that just don't work anymore? Or is it going to be a vision, a forward-looking strategy built with a rock-solid defense and a razor-sharp offense, truly ready for whatever this new world disorder throws at us?